Good afternoon. Jobs data and inflation data over the last week is definitely shaping up to tell quite the story. So obviously the question is, what does all this mean for the Fed meeting coming up in September? So we're going to touch on this, but also a really good question of the week this week as we bring the meme stocks back into focus. So I'm Brandon Steele, financial advisor with Mainsail Financial Group. And our goal every Thursday is to bring to you the market news, the data, the trends we're watching, and weed out some of the noise along the way. Again, I think this week, the two primary areas of focus are going to be jobs and inflation, which obviously ties to the Fed. So last Thursday, we covered the ADP employment report number, which came out as a huge number. It showed that we added a ton of jobs in July. And for those who tuned in last Thursday, you may remember me suggesting, be cautious of watching this too closely because there has been a big discrepancy between the ADP employment report and the trends that shows versus the non-farm payrolls number and what that shows, which is where we focus. So that brings us to last Friday, where we had non-farm payrolls come out much weaker than expected, and a very, very different story as compared to the ADP report that came out that previous Wednesday. So ADP suggested a huge month in jobs. And again, non-farm payrolls actually came out showing we only added 187,000 jobs versus the 200,000 that was expected for the month of July. It's the reason I wanted to point this out is because I've always shared in these updates to be cautious of this ADP report, but the last 2 weeks or 2 months, excuse me, this has been the theme where ADP report shows a giant jobs number and non-farm payrolls shows a much different story. So let's maybe kind of continue to lean in on that focus. Let's make sure we kind of pay closer attention to this non-farm payrolls number, which again told a very different story from the ADP report. And then we fast forward to today on Thursday, where we had initial jobless claims come out, and that number ticked slightly higher as well. So the reality is jobs are kind of all over the place in terms of the data, but between the one that we'll maybe put a little more weight on, the non-farm payrolls, and this initial jobless claims number today, it does not show any signs of a weak labor market, but nonetheless does show that it may not be as strong as we thought going into last Wednesday. And then second part is inflation. So just today, we had CPI numbers come out. And although I want to focus mostly on the core CPI, I do want to focus on the headline inflation number because all the news right now is about the headline number. So headline inflation number actually ticked higher in July, and a lot of this was due to increases in rent, but basically it ticked higher to a 3.2% annual rate. All right. All that said, as I've shared time and time again, we want to strip out food and energy and focus more on core CPI or inflation. So core CPI actually came out at 0.2% increase in July, which is the same as it was in June. Now, this does mean that core CPI dropped year over year from, I think it was 4.8 to now 4.7% year over year. But the question is so why, right? And I want to make sure to put this in context a little bit because if the number stays the same, obviously that could potentially lead to some confusion. The key is obviously if it's year over year, remember that a year ago we had very, very extreme inflation numbers. And so now here we are in August of 2023. And what it means is the June, the May, some of those early high inflation numbers are starting to fall off of this report. So remember, this does not mean that inflation is not here. It does not mean it's gone away, but what it does mean is that maybe the rate of increases is cooling, and so as those high numbers continue to fall off on the back end and we replace them with still high but lower numbers on the front end, just know that year over year number is likely to continue to keep ticking down, even if 0.2 remains the kind of theme and ongoing pace of the month-to-month numbers. The question is, well, what is the Fed going to do in September? The reality is, who knows? I think it is a little bit silly to put too much thought into that quite yet, because we still have more inflation and jobs numbers to come out before they make this decision. Now, what I will share is that if these numbers continue to persist, I don't know that they will make a change, but I think that the language, which has actually been the more important kind of part of the conversation, the language in their meeting is going to continue to remain hawkish. In other words, continue to keep rate hikes on the table. Whether that happens or not, again, I don't want to speculate too much on that at this stage, but let's keep a close eye on jobs and inflation over the next month here, and that will start to tell a story. If we see similar numbers to this month, next month, I think it's very likely that the Fed keeps rate hikes on the table yet again, and kind of shares a tone that, that they want to get this thing under control. So question of the week is a great one this week about meme stocks. For one reason or another, meme stocks are back in the headlines, and something that have kind of taken on some more momentum again here in 2023. So as a quick reminder, you may remember this back from 2021, the social media flurry of people commenting, people getting together to kind of buy these particular names and prop up the stock to some degree, and hopefully experience some returns along the way. Here we are in 2023, and we are back to these same conversations. I want to share a cautionary tale, okay? And the reason I share that is if we go back to 2021, some of the names that you might remember, Bed Bath & Beyond, Bed Bath & Beyond, what else? GameStop, AMC, to give you kind of an idea. Some of you may remember in 2021 how quickly these things spiked. What you don't hear is you hear all about the people that made money. What you don't hear is all about the people who lost probably a ton of money, if not all of their money, when things turn the other way. So going back to 2021, AMC has dropped from $60 a share or so at the high to $5 a share. Bed Bath & Beyond dropped from $35 at the high to about a quarter today, 25 cents today. GameStop dropped from about $80 a share to about $20 today. So just keep this in mind, right? Of all the stories you hear about all these people who are ranting and raving about all the money they made on the upside, I can promise you, unfortunately, and it's a sad story, a lot of people have lost their retirement savings on the downside of this as well. Now, if you can somehow time this thing right, to get on the right side of this equation and know exactly when it's going to turn, obviously it can benefit you when these stocks get propped up like this. But again, know that a lot of people have lost their shorts on the downside there as well. All right. So basically, what these meme stocks are all about is we get a bunch of people on social media buying these beaten down companies, and what has happened is because of the influence of social media, they've been able to pool a bunch of people to basically buy these cheap stocks and prop up the price, basically influence this price as a bunch of people pile in, right? It's all supply and demand, right? Stock price goes up when more people buy. Simple as that. However, what I want to point out is to remember that these stocks are beaten down typically for a reason. So to buy something just in hopes that the ride continues and that more and more buyers pile in is very, very risky and very, very speculative, especially in a company that may not be anywhere near the value that you might be buying that share at. But, I think the reason this is coming up is actually because Ryan Cohen, I believe it was, is being sued right now over securities fraud. There's a tweet from a long time ago with a moon emoji, and, it's kind of like bringing into question the legality of this and how much influence somebody could have through social media on manipulating stock prices. So it's really interesting because the question obviously is like, well, where's the line, right? If a hedge fund manager comes out and says they're buying into this particular stock, you might imagine some money can follow that as well. So it's a really interesting conversation of where that line gets drawn between the kind of like social media influencer world and the more institutional world. And I don't know that I have a good answer for that. I don't know that the courts have a good answer for that. It's something I think they're working through, and maybe this case is an example of that. So of all the things out there, I mean, if you look at some of the more speculative things like crypto or whatever, at least there's maybe some merit in terms of what that could mean for the future. To buy a stock just simply based on momentum in the hopes that people continue to buy that to prop up a price that is not deserved is extremely risky and scary, and nothing to kind of support it. So please be cautious, but nonetheless, I wanted to touch on it because it certainly is back in the headlines again here now. Thanks everybody for joining us here. We will be sure to catch up next Thursday at the same 3 p.m. time to touch on PPI, retail sales, and Fed minutes. But hopefully this question of the week was helpful to you as these things end up back in the headlines again here in 2023. Have a great upcoming weekend. We will see you next Thursday.